You have 6 now, though, so it's.
All right. Call the October 15, 2025 stormwater board order. Mr. Gateman,
President Dick Kaiser,
present.
Vice President Olson, members Hultanian,
Present.
Consideration of minutes. Review the minutes. I'll entertain a motion to approve.
I make a motion to approve the September 17, 2025 minutes.
I second that motion. Motion second, any further discussion? All those approved, signify by saying aye.
Aye.
Those against, same. Motion carries. Citizen comments. Financial report. We have a register of those. What is UV refund?
utility bill refund.
Oh,
What was fluid waste doing?
They televised that line that I reported last month at Saxon and using. There's a single out there, I was trying to figure out what was causing it, so it's just a little bit delayed as far as billing.
I reviewed the claims register. I'll entertain a motion to approve.
I make a motion to approve the claims register.
I'll second that motion. Second discussion. All those that approve signify by saying aye.
Aye.
All those against, same. Motion carries. And the board report.
And yes, I'm continuing to investigate single issue for the Beach Drive. A little bit more detail on this. These poles seem to fall outside of the utility easement. They're way closer to the house, and everything that we have as far as mapping goes shows that they fall outside of the utility easement. But we've done work there. It's been like 2020. So I'm not sure if maybe it just needs graded in certain areas and maybe something was left. I'm not 100% sure. The homeowner has some concerns as far as material being left, so I'm continuing to investigate that.
Is that I don't know what each one is. Is that a new?
It's in Glen Oaks,
700.
so right behind Grant's Corner.
Did you stake the edge of the easement or was it obvious that?
It's
Oh,
obvious.
okay.
It's like almost up against the house.
Okay.
I reached out to AES about the work completed, causing the sinkhole at the corner of South Musing and East Saxon. After having it reviewed, the video reviewed, we do believe that it was electric and the electric pole's right there. So I reached out to them to get try to get some correspondence going on getting that fixed. I
Heard
met
back from them?
no.
Yeah.
I met with a contractor about repairing the street inlet on Dunbar North. This one is very, very steep. We have reports of, resident falling in this, it's so steep, but while we were out there, we talked to the resident who lives right there, who is the elderly gentleman, and he didn't know what we were talking about, so I'm not sure what that was about. And Cody and I have been working with homeowners in the stormwater improvement areas regarding questions about the work plans, mainly on Monroe. That was a big one. Had some questions in Glen Oaks Village. One thing I did forget to leave off here was that we did street sweeping this year. They actually just finished the work last week, so I just need to get the totals from them for our reporting. I've updated the financials from all the agreements that we have out right now and 9 homes I'm monitoring in Parkview Village and 2 in Grants.
Has the Taylor Morrison community started?
Yes. I don't know that they're taking any houses yet, their first structure was a building that they did there. The common agreement. We do have some inside contacts with AES that we'll try to eliminate first before we make like send them an email, so. Yeah, but sometimes it comes to that.
Yeah.
What was this?
Update on the 2024 stormwater improvements project. We just had a progress meeting yesterday, so these are the minutes from that meeting. Got a good update from Eagle Valley on schedule, so, they had stated that they started the water main relocation work in the, Proper North neighborhood. And plan to have that finished by the end of this week. They're planning on having 2 crews starting next week to do the Division B work, so they'll kind of be spread out throughout Cumberland, over through October. Their plan is to get Division B, at least like the storm sewer installed done, by the end of October. And then they'll probably move to Division A, sometime in November, but, we'll give you updates if that changes. I think it's a little different than the schedule. Their schedule is kind of spread out in general lumps of work, so. I think they put all of Division B storm sewer work together, all of Division A storm sewer work together, so. In fact, to be more specific, we'll give you more information as they go. They are also, they have a situ form out that they're doing the cleaning and pre-video of the sanitary line I'm using to get that CIP line before they install the storm sewer next to it. And yeah, that is the status update. Any questions?
I was driving by the project right here, and the water bubbling out of the ground. I wonder if they hit something
Is that just on your way
just
in?
20 minutes
Right
ago.
now.
Okay. Good to know.
Where is that? You said,
What do you say?
using it,
Yeah.
it's just on using.
Yeah, you'll see. I
Okay,
got a pump out there, they're pumping up water.
it might be part of the water main relocation, yeah.
I was gonna say, they were expecting outages on that today, and they talked with the green meeting, some of the local residents over there about. Being without water for part of the day today.
You said this differs, the current progress differs a little from the schedule of the center, they had it in mind.
I was just saying they're within their windows of the schedule, it's just their schedule not very specific as to what project areas they're gonna be at, and, but they are, so. Is it 6 project areas throughout, that are in Division B are gonna be done within 2 weeks, so. At least the storm sewer install. I think it falls within their schedule window, but I'm just being more specific.
Business.
In your packet, you have a draft of the 2026 stormwater budget. We try to do things a little bit different as far as formatting this year to help them make it easier to understand. So we have one form that is the debt and depreciation, and then one that's just strictly operating. I can start with the operating, if that's okay with you.
Yeah. You guys also have Adam Stone, Stone Municipal here, municipal advisor, and that's also why Eric is sitting in here. So you have pretty much all four of us that work on the budget. Eric is clerk treasurer. Yeah. So we get as in the weeds as we guys want on everything, and also talk about format wise, if you like this format, there's things you'd like to see in the future, future budgets.
At the top, you have your customer receipts, so any money that we make off of the utility bills. It looks like there's a $50,000 difference from 2025 to 2026. Is that due to the rate increase?
No, it's just based, more on what our collections were so far this year, yeah. So basically growth, new customers.
And down to personnel services, for the most part, everything went up the 3%. That's the cost of living, but the biggest jump you'll see is the regular non-exempt. I don't know, if you remember, when we bonded, we included the addition of another employee.
Not in the bottom.
Or the rate increase. That's what that is. This, and the FICA med and PERF also, and health insurance also include the cost of the new employee. So that's why there's that big cost jump there. For services, everything down below looks about the same. And then you have your transfer debt and other. The transfer to depreciation. Erica, do you want to explain that?
Yeah, that's just basically our net revenue for the year. We moved to, the depreciation fund, so that's basically just holding reserve fund for capital projects. And you'll see the budget for the depreciation fund, in the next, on the next sheet. So we take your revenue and then minus all of our expenses. Based on this plan, we should end up with $51,000 at the end of the year. So we're moving that over to the depreciation fund for future projects. Ideally, we wouldn't have to issue bonds. We would make enough money that 20 years from now, we'd have enough money in the depreciation fund.
Build up your depreciation fund so that it can tackle capital projects in the future more without having as much of a need for rate increase and debt issuance. So goals to build the depreciation fund of the utility so that you can stabilize things a little bit more.
There are any storm impact fees?
They're not, there's the permitting fees for storm, but there's not like a impact fee mechanism, so it's more. Utilities don't really have as much of the impact fees like roads and parks and things like that, but when they go to permit. It's kind of the equivalency if we're put that in that, so. We are looking at those fee structures and things as we evaluate. Revisit rates and other things. Try to move some of the cost of growth of development to developers a little bit. Within reason.
So storm permit fees, should that be in the revenue or is it embedded in there somehow?
Yeah,
I'm not sure that we've actually had a whole lot kind of qualified for permitting. The state has to have so much disturbance on that. But I'm not sure if that's being calculated.
it's possible that those, if we have collected any this year, that they were misclassified into sanitary permits, but that's something I definitely guess.
We also have a unique issue with our permitting in Marion County because of Unicode. There's a little bit of a policy dispute and argument over permitting because they view themselves as the permitting authority in all of Marion County despite us having a stormwater utility, so. They are trying to permit our projects, so. That came up specifically with the Blue Line Terminus project on the far side of the they say that we cannot permit the project. Or despite us being strong on utility and maintaining everything, so we're trying to solve that dispute.
Are there any questions on the operating portion of the budget?
What's storm permit? Under personnel.
That is the public employee retirement fund, so that's the share of the employer contribution to that. I forget what that percentage is. Every employee has a mandatory 3% of pay to contribute to their town has to pay
Roughly 6%.
6% is our pension. That's how this state program works, so.
For the fund 626, that's the storm seeking fund, so that's the money that is budgeted for the payment of the bond. Is that correct?
Yep.
Okay.
And that's budgeted as a revenue and an expense in that fund because we transfer it. If you go back to the operating, there's the amount down here in transfer bond and interest. So we move it out of the operating fund into the bond fund. So you see it as a revenue as well as an expense.
And your fund is 628. As Erica stated previously, that's money left over from the year before, so that's money used for capital expenditures. And fund 629 is the bond proceeds, and that's where we would pay the contractor.
You can see there, you're earning decent interest on the loan, in the account as well, so that's revenues that go back to, the utility to go back towards capital funds.
How long does the bond for?
And so, I hear,
And I have a few, I have a few comments as well. That's what I was thinking, just,
I'm pretty positive it's 20 year time, and say,
2045 is. Take off, so.
20 years.
hi, good evening. Hey, again, my name's Adam Stone. I'm was part of the financial team here for the town and I wanted to have an opportunity to review this and just wanted to provide some sort of 30,000 foot view with respect to this as well, to the extent you have any constituents, ratepayers, et cetera, that have questions. And or just to make sure to fill in any gaps as well. So taking kind of a big step back and looking at kind of the purpose of this. And, you know, in municipal government, budgeting is very much a kind of policy planning tool. It is, in the case of this, this really sets the legal spending authority for 2026 for stormwater funds, okay? So there really no activity can be actually administered until budget is passed. Tonight procedurally, it's just introduced. My understanding is it's set for the final reading and adoption at your next regular scheduled meeting. In the state of Indiana, if no budget is adopted, then you revert to the former most recent adopted budget by your action. So no action on a budget or no vote, you would essentially carry over your 2025 budget, okay? Whereas if you took action as a body at your next meeting to approve either what's proposed for 2026 or some other edited version, that becomes the new legal spending authority within the funds that the stormwater utility manages for 2026. You are not approving contracts, you're not approving any of those things, those will all still come before you as part of your normal sort of docket process. But it allows staff in the town to execute payrolls and those types of things into the budget year. Couple of terms that are sometimes thrown out but rarely defined would be the term appropriation. It's rarely used outside of a municipal lens. Appropriation is really just a synonym for an adopted expense category or component. So if you look to the leftmost column, that GL number, and there's that sort of string of numbers by each type of expense, that is an appropriation code that goes within the town's overarching accounting and budget management system. That's how they're managing, you know, this specific, you know, office supply budget from the town's budget or something like that, okay? And the first 3 digits of that account number, appropriation number, designate which fund, ledger, and appropriation comes from. So the best way I can explain it is within utilities, there is a flow of funds. So think about, I'll try to use this in the most business-like terms possible because the utility operates more like a business than even town funds do, okay? It is a public utility, but there are private utilities that operate as well. And they follow the same sort of accounting mechanisms, and it's a flow of funds type mechanism. So imagine in this case that the funds are representative of kind of different bank accounts, different checkbooks, okay? From a practical standpoint, there's actually probably only 1 or 2 bank accounts, but for just purposes of simplicity, it's easiest in your mind to think about if the utility had, in this case, 4 separate bank accounts. Okay, bank account 1 would be all activity for Fund 626. That's the main operating fund. That is the normal day-to-day operating account of the business, in this case, the stormwater utility. It is where payrolls are made, it is where customer revenues are deposited, it is the main activity of the utility. What is not tracked in that fund are bond and interest payments and capital expenses for any expenses related to a loan or a bond. Okay, those are denoted in special purpose funds, which is that second page. As your advisor, I actually do like the presentation change where the operating is really 1, and then the second page are the 3 sort of sub funds. So when I meant the flow of funds, so customer deposits, customer activities get receipted to the operating fund. It paid first and foremost is payroll, operating expenses of the utility. You can look at then the net operating income or the net operating cash flow of the utility per this budget is over $400,000. That excess is then what is funding the transfers to the bond and interest and the depreciation accounts on the second page. Okay, so all of the sort of receipts on page 2 are flowing from the operating receipts, the net operating income that the utility has. And the order of priority there is bond and interest goes first. So for any excess net operating income, first go to pay bonds. Your budgeted debt coverage ratio for 2026 is 164% based on estimates you have before you, well above suggested minimums. Okay. From that, if you look at the $404,000 of sort of net customer income above your sort of operating expenses, first that goes to pay the $246,827 worth of principal and interest payments that are due in 2026. Leaving a remainder of the amount that is going to the depreciation fund. The depreciation fund could be sort of retitled in your mind as sort of the stormwater rainy day for a pun intended. But in all fairness, like it's a reserve account, it's a capital reserve to build up cash separate from the operating reserve and separate from the debt administration accounts, to be able to cash fund what is technically referred to as pay-as-you-go projects, pay-go capital projects can be expended. So for example, looks like you did about $3.5 million, $3.4 million bond in the past. You could, if you had $3.4 million worth in the depreciation fund, you could have cash flowed that project. Okay. As of today, you have about $726,000 in that reserve. You're expected to add to it. The town, as it's drafted, fully appropriated that fund. So you have an unitemized capital outlay in Fund 628 of $431,838. That is appropriated authority to spend of this commission next year on capital items that arise, break, fix, repairs, those types of things. Okay, if it's not spent, that money is just saved and roll over to the next year in that respect. So as an outside advisor on this, I like how it's constructed. We have independently worked with clerk treasurer and Caitlin on making sure we understood sort of the reserves and cash amounts and everything sort of checks out with what we would be expecting to see, follow best practices. From an operating fund perspective, this is a balanced budget. And I think the reserves are commendable, specifically the depreciation fund. And I think that there's definitely a lot to like here with respect to what you're doing. From a approval standpoint, if it's approved, it becomes the legal spending authority, sets the maximum amount of spending within each category and at the aggregate level that the utility can make next year without bringing an amendment to you. Okay, so from a procedural standpoint, if any of these budgets, for example, need to be higher next year, they will have to procedurally come and request what's called an additional appropriation from this body, to get any sort of amounts that are higher than what otherwise will be approved in the spending plan. Okay, if you have any other questions, please let me know. Otherwise, I appreciate the opportunity to come tonight, and I hope this helps.
Yeah, thanks, that did help quite a bit, actually,
Yeah.
appreciate it.
Yeah, my pleasure.
I do have a question,
Yes, sir.
So that, so on Fund 628, the net revenues and appropriations Fund 628, the last line there.
Yeah.
bottom right corner.
Mhm.
That's a negative number.
Yeah, so what they're showing there is, basically the estimated revenue is only 20,000 interest, and they're fully appropriating the fund balance to take it to a zero. Okay, so that is really, like I call them a plug or a balancing cell, that they're fully appropriating the entire cash so that you could use it. Okay. As a matter of preference, the board could also set sort of a minimum threshold and say, hey, at any given time, we want to have $250,000 of reserve that's unappropriated. And in other words, our methodology is we're not going to fully budget everything. We'll budget, half of that or whatever, and then it creates a forcing function that they have to come back to you to fully deplete the fund. From my perspective, I actually generally like this approach because things pop up. And what is appropriated here, you're still going to have contractual items on your agenda to approve it. I just wanted to make sure to educate, inform kind of what is happening. And also you have a choice here, if you want to lower that. There are communities that do not appropriate from this fund, forcing then every expense from the fund to come back for you.
I want to point out too that there is the 314,000 that's appropriated for 2025. We haven't spent any of that so far this year. So even if we did spend that entire 431,000, there's still whatever the balance that we didn't spend this year would still be available in the cash fund. Because the cash in the fund, you can see, it looks like at September 30th, it was 726,000 total.
Yeah, I could give you pros and cons both ways. I mean, if the trust is there and you've got the contractual kind of safety guard. We had when I was still working for the city, we had a sewer pipe burst in the middle of the night and we racked up like $80,000 worth of bills like that night and had nothing appropriate. So there's practical things here. This is intended to be sort of the emergency kind of capital planning fund of the utility. So to some extent, it should be well planned, right? There shouldn't be a lot of surprises from this fund, but at the same time, it is also where break fix and those kind of things kind of get tapped. So I think it's just a matter of making sure you're comfortable with it. But from our side, just based on our knowledge of, like, for example, 314, how it's been operated this year, I think what you have before you is very conformal, very standard what we see.
Okay, so 726,000. It's a standard amount that's not high or not low.
No, I love it. So 726, a couple different health metrics there to give you some North Stars. One is that is real darn close to your $753,000 revenue forecast back in the operating. So the way to think about that, and like started my career in personal finance, so I use everything in like a personal lens. That would be like most personal financial advisors would say, 3 to 6 months of expenses in a account, you have almost 12 months, right? Would be one way to think about that, right? You have about 1 year of revenues in that fund currently. As far as what could it be or what should it be? Well, that is kind of an engineering capital conversation, but as a financial sort of proxy, we would say, well, what has been the average capital spend in the last 3 to 7 years on average? And that gives us an order of magnitude of what we would want to be able to buffer. Like, we want to be able to only go to the bond market when you have to, right? If you can self-finance and self-plan your own projects, that's the best healthy utility to be, is a cash flowing utility that is debt free, right? So But you gotta build up to that, right? Part of that is making sure that your rates are healthy and producing net operating income, yours now are. You wanna make sure you're covering bonds, you now are. The next step now is building up those reserves so that you can do your capital plan, not defer it, do it. And get it to the point where you can handle, as big of a project list as you possibly can. It would be a good sign of the utility that $50,000, $100,000, $200,000 projects. You're just doing those as you can plan them. You're not having to wait for a bond event to do those. Reserve the bonds for the big transformative kind of regional projects.
And then also I thought that, it's a utility, it's not a business. And so I thought there was some law or something that said that we had to operate as close to zero as possible.
You have to have, that's essentially true, you have to have a fair and equitable rate, and you can't make a profit. Depreciation doesn't count as a profit because you're bolstering for future planning and to reduce future rate impact and those items, so. You do want to be cash funding. I do think, it may be also helpful for you guys to know that, like Adam's talking about the progress in most utilities and stuff, but. Stormwater utility didn't exist until the early 2000s. It's pretty universal for that. It was all property taxes, general fund property taxes funding it. So like it's relatively young utility in the grand scheme of things. Indiana didn't allow for stormwater utilities, I think, until late 90s, early 2000s. It's when they created a permit for stormwater. So town of Cumberland was an early adopter of that to move it to the fee-based system rather than a tax-based system. So it's been kind of a 20-year-ish build up since the town formed this utility. So.
Any other questions for me?
You may have just answered this, but capital outlay storm depreciation of 431,000. Is that money that goes into depreciation fund? Understand that?
That's appropriated to come out of it. Yep, so in other words, that is as drafted, that would be the amount, that's essentially the amount that if that dollar amount was spent, that fund would be zero. Okay, so in other words, it would be like appropriating, that's fully appropriating to where, like in a kind of worst case scenario, next year, you have the ability to do $431,000 worth of capital improvements in the utility. And you, like I said, that would be where you could say, hey, we want to leave X dollars, okay, as for the floor. And as a practical matter there, that there's really not a rule of thumb there, other than I would say, if you're inclined to do that, I would probably say somewhere in the probably 100 to 200,000 minimum. And that would give you sort of maybe a little bit of a mix between, you have some authority pre-authorized, while also then creating sort of a gate where if they need more, they've got to come back to you.
So that 431 can be spent without coming back to the board?
It's, well, no, it's appropriated. They would still have to bring sort of project requests and contracts and approvals all to you. This is just on the financial sort of, it's what gets entered into the accounting system, right? But as far as like a specific contract or vendor approval, that would still come back.
Still has to follow all procurement laws and guidelines. It's just their only circumstance when something large a capital would be spent without coming to the board is if the emergency spending ordinance was activated. For instance, if you had a really like a situation like Adam was saying, very deep pop a sinkhole that's closing down the road or a public safety thing, we would then contact the board and then indicate we have an emergency expenditure, you have to fix this roadway, it's a public hazard. So that's the only time something would be done without flowing through the board, which knock on wood is likely fairly rare, but it does happen. I think it was about 2013, we had a sinkhole pop up that was in like a just old like 43-inch corrugated metal pipe that haven't televised under about 15 feet, about 15 feet deep. So by the time the sinkhole emerged, it was pretty severe, so. Had to get it closed down, start work, it was about a $85,000 repair at that point in time, so that's why. Having it appropriated and ready to go was. Nice for those type of situations, as you guys know, infrastructure. Projects don't tend to be affordable these days particularly, so. I don't know.
And then, you had said that there's, the. Storm operating budget. Transfer to depreciation 51,731. That was supposed to be
Yeah,
matched over here.
yeah, it was, yeah, I noticed that as we were sitting here.
Okay.
So that should be, because we just added that at the last minute, but I didn't add it to this, so.
Yeah.
What I would have done is add that 50,000 on the line, and I'll get that corrected for the next time.
Okay.
And then I would increase the capital outlay amount by that same amount, by that 50,000. But like Adam said, it's completely up to you guys if you wanna make it whatever number you wanna make it, do that. And it's just a matter of having to come back, and usually additional appropriations take a couple of meetings, and you have to do a public hearing, or, you know, whatever the procedure is, it's just more procedures that have to be done. But obviously, the contract and the project to you either way.
Yeah, I would say two observations. One is great sign, you're seeing that flow of,
Yeah.
you know, things you're seeing. That's exactly what I wanted to show today. It's just like, that there's a lot of different accounts and stuff, but everything has a purpose, right? Everything kind of flows. The second thing I was just looking at, back to your question, sir, on the 431,000. One thing I would mention is, that's assuming that the full 314,313 also gets spent this year, right? So, in my understanding is none of that has been expended, so it's initially planned to be spent. So you kind of have a built-in reserve there, if you're seeing what I'm saying. So that would, if we get to the end of 2025 and none of that $313 gets spent, then that will be in your fund balance as well, right? Unappropriated. Just want to clarify that. So the way it has been drafted is actually consistent with how the 2025 budget was calculated and drafted. So this would be kind of a matter of, not really policy, but a matter of just preference. You wanted to set a different one. And like I said, we see everything there. There's really not a right or wrong answer, just a matter of preference. If you have any other questions for me, just shoot me an email, give me a call. Happy to walk through it. Otherwise, thank you so much, and appreciate you all passing the budget. Wish the federal government would do the same. There you go.
Thank you.
So I will make that correction, for your next meeting, and I can just add that to the 431, or if you want it to be different, you can let me know now, or let Caitlin know, or whatever, or you can change it at the meeting next time.
Yeah, probably add to the 431.
Okay,
Yeah. Sure, yeah. So we do have that extra 314,000, so. It's interesting. Okay. Future agenda items.
Yes, you'll have the consideration of the 2026 stormwater budget and the another 2024 stormwater management project.
So next time is when we vote on the budget.
Correct.
Yeah. I make a motion to adjourn the October 15, 2025 stormwater board meeting.
I'll second that, so motion second. For the discussion. Approved, G5, I say 9.
Aye.
Aye. It's against the same. There's